Hi there, you're watching Buy Now, Sell Now on ET Now with me, Shreyansi Singh and Cheryl D'Souza. And over the next 1 hour, we'll get all of your stock-related queries answered from both a technical as well as a fundamental perspective. But first things first, let's take a look at the market. And a slight tinge of red is what we have on our hands, at least when the Nifty is concerned, Cheryl.
Absolutely, Shreyansi. Not only Nifty, the markets are actually pretty boring, I could say, in today's trading session. And that's how we've been with the last few trading sessions. We have been actually seeing this sort of lackluster move in the markets. Today we are trading flat with a negative bias. Yesterday we were trading flat with a positive bias. Now Sensex has dipped towards the day's lowest point. Let's take a look at what Nifty Bank is doing and how the rest of the market is looking like at this point in time. We have the Nifty Bank that is seeing or rather underperforming benchmark indices in trade today. 0.5% downtick coming in for Nifty Bank, while the advanced decline ratio for now looks neck to neck. You have Hindalco, HCL Tech, Trent, Tata Steel among the set of gainers in trade today, along with Tech Mahindra. While on the flip side, TCS reacting to its numbers is down about 1.6%. Mahindra, Cipla, ICICI Bank, Adani Enterprises are the other set of losers in trade. Let's put the spotlight on the sectoral indices and let's see how the sectors are looking like at this point in time. And talking about the sectoral indices, it's a realty index that's taking a bit easy. Auto is also taking a bit easy. But metal is holding on to good gains, about 1.3%. IT is also positive, while the broader markets are also seeing good positive moves at this point in time. So that's the way how the markets are looking like right now. Shreyansi, we are seeing boring moves on the markets, but yes, it's boring is also good sometimes.
Well, absolutely, and let's see if it remains boring or if it gets a little bit interesting a little bit later. But for now, let's also take a look at Buy Now, Sell Now Pathshala, because it's that time of the week when we get you technical analysis from Kunal, and Gravestone Doji is what we're looking at today. Kunal, this is a bearish candlestick pattern, isn't it?
Yeah, so I think the mood of the market itself over the last 1 or 2 weeks has been a bit negative. And that's why I've taken this very interesting candlestick pattern, Gravestone Doji. Now, for traders who know a bit about technical analysis, they would understand that just going by the name as well as the parameters of the candlestick pattern, it indicates that it's a start or an onset of negativity or downtrend which comes back into the asset classes. So the first and most important point is that it's a bearish candlestick pattern, or it denotes an upcoming trend which is on the negative side. Now the second, the most important part, it's a strong signal. So there are candlestick patterns which are mild, which are very average, and there are candlestick patterns which are very strong. Gravestone Doji is one of the strongest candlestick pattern signaling a downtrend. And the third and the most important part is generally the occurrence of this candlestick pattern is generally seen at the major top for an asset class or for an index as such. So I've taken two examples over here, one from a stock and the other from the index. We look at the charts over here. The first one which we are looking at is Exide Industries, and very recently we saw the stock going into a very strong uptrend. So if you remember, there was this phase of major uptrend where Exide Industries formed a bottom. This was in the month of March, when the stock was almost at 250 levels. From here started a major series of an uptrend. In the process of this uptrend, the stock formed a high which was around the 600 levels. This candlestick pattern which you're seeing is a formation of a Gravestone Doji. So this indicates that the stock for the first time started to show signs of negativity, and this could be signaling a major top in place for the stock over the near to medium term. This is the weekly chart, and imagine from the month of June, when the stock formed this Gravestone Doji pattern, for the next 3 subsequent months the stock has been trading into a downtrend, and from 600 levels the stock had corrected back towards almost 450, which is a decent correction of almost 20-25% for the stock, and that too on the back of this one major candlestick pattern which signals a major top. So a major revival happens when the stock breaks past about the previous swing highs. We look at one more index or one more chart, and this time around it's the index which I am signaling, which has formed a Gravestone Doji pattern. So this as you can see is the charts for Bank Nifty, and the formation of this Gravestone Doji pattern which happened over here at 54,000 plus levels for the Bank Nifty resulted into the index going into a sharp correction, and the last 3 weeks we've shared almost 4,000 to 4,500 points for the Bank Nifty itself. So that's the importance and the significance of Gravestone Doji. Generally, when you spot this on charts, on asset classes, indices, on the longer term time frame, it has very deep repercussions over a medium to long term time frame charts.
All right, thank you so much for that, actually, Kunal, for explaining to us at least briefly what Gravestone Doji pattern actually means, and I'm sure it takes a lot more to understand these patterns, isn't it?
Absolutely. So not just the insight of looking at the charts, but the occurrence of the charts, the volumes which go behind, and all of the other flow of the indicators which go behind, all of that is required. So this is just one step analysis of you to try and go or deep dive into the world of technical analysis.
All right, thank you so much for that, and you've always made it simpler for our viewers, or made it exciting for them actually to take a look at the charts of each and every company or the markets to try and understand and analyze and at least invest better and smarter. Thank you so much, Kunal, for that. And on that note, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll start taking your query, viewers, so don't go anywhere.
Welcome back. Thank you so much for staying tuned in. Well, let's kickstart taking all of your stock-related queries then. And remember, viewers, when you do write to us about fresh queries, do mention that the time frame, the investment horizon that you have in mind. And when you're writing to us about stocks that you're already invested in, do mention the buy price that you had in that particular stock as well. On your screens, you can see the WhatsApp number that you can write to us at. But we do have Kunal who's joining us right now. Kunal, I'm going to come to you with the first query that we have, and the first one that we have is from Gautam from Mumbai. He's writing to us about ITC. He has 5,000 shares at a buy price of 265. What is your call here then?
Wow, 265. The stock is almost at 500. Recent high for the stock was around 525, 530 mark. So an exceptional mover. On the longer term basis, we've seen what the stock can do even after phases of years of consolidation. And recently also, I think the last 3-4 years, we've seen ITC moving up from 200 to 20 mark to 500 plus levels. So my sense is that since you're a long-term investor, I think you should continue to stay put into the stock. There could be some bouts of correction, volatility which may come by into the stock, but that should not deter a long-term investor, like you. So I would suggest to stay put if you're a long-term investor.
All right, stay put with ITC if you are a long-term investor. Kunal has been saying ITC for the longest time. Stay put with this one, Kunal. But if someone has to actually try and analyze, because we all know ITC has woken up from slumber of sorts, right? When it started rallying, I believe in the year 2022 is when the rally actually started for ITC. For years of consolidation, people were frustrated. Now I think people have started making memes on stock prices because then they don't know when the tide turns and it's always for the best. But then what is that trigger, or what sort of a signaling would it mean that this rally is now coming to an end or pausing? Because I think it's taking consolidatory phases in between, right?
Yeah, so it's the nature of every stock. So for example, ITC has been historically a very moderate beta kind of a stock. It comes from a sector which is FMCG, which is erstwhile considered to be a defensive sector. So you have to look at the two prime behavioral characteristics over here for the stock. So if it's a low to moderate beta stock, and if it comes from a defensive sector, which means that the stock is bound to get back into a zone where it may consolidate for a long period of time. The trends could be very short-lived, but whenever the trend starts off for these stocks, you see a rally or a pickup of 20, 30, 40% of price action, and then suddenly the stock gets into a 3-6 months of consolidation. So the best strategy over here is to buy the stock when there is a lot of consolidative price action, and when it comes back into a mean reversion phase. So technical terms, but that's where you need to try and use the opportunity to try and buy, rather than buying the stock when it comes back into a prime in terms of trends.
Alright, so that's the take coming in on Kunal's preferred pick there, ITC, that we've been talking about. We also have Nilesh Jain, who's joining the conversation now, head derivatives and technical research, Centrum Broking as well. Nilesh, I'm going to come to you with the first query. We do have Satya, who's writing to us, a regular viewer of the show, who wants to know about national insurance. He wants to know if he should be switching to Star Health instead of national insurance. What is your take here?
So if we compare the structure, both the stocks are in a downtrend from a short to medium term point of view. I think it's not advisable to switch because even if you look at Star Health, the structure has broken down today, and the structure looks weak for 540, 520 kind of levels on the lower side for Star Health. So first of all, avoid taking any contraband at current level in Star Health. And national insurance, I think it's trading at 210. If already holding, I would suggest to keep a strict stop loss somewhere around 195. If that level is taken off on the lower side, then we might see a further downtrend to continue. And any pullback towards the 230, 240, that can be used as an exit opportunity for the time being. And instead of staying within this space, I would advise to shift to insurance space like HDFC Life and SBI Life. These are the preferred bet within insurance space.
All right, let me take this next query then. And the next query that I have is coming in from our viewer, that is Ron from Mumbai. Oops. Actually, he has a fundamental query. He wants to know whether he should look to subscribe to Hyundai IPO. I'll skip this and maybe I'll take it on a Monday, because viewers, today is the techie special episode of Buy Now Sell Now. I have this one coming from Satya. He wants to know about Bata. 150 shares at a price of 1,852. He wants to know whether he can hold, exit or average. Kunal, what's your take on Bata?
So I'd be bullish on the stock now. I understand that it's been going through a phase of 3 or 4 years of a downtrend from a high, I think 2021-22 of 2,200 levels. The stock has come back towards 1,400 mark, and that too in a progressive series of lower highs and lower bottoms on the charts. But I believe that eventually after such a major multi-year of consolidation correction, the stock is getting ready for bottom formation process. So I think this zone where the stock has been protecting this 1200 support, which it tested in 2023, and the fact that it's trying to absorb all the phases of correction and still not make a lower low, I think could probably be an early indication of the stock forming a bottom. So I would suggest that hold on to the stock. If possible, look to add further at dips.
Alright, so that's about Bata India, but let's also take a look at the next query that is coming in from Rahul Reddy from Hyderabad. He wants to know about Ujjivan Small Finance Bank. He has 1400 shares. Should he buy or hold at the current price? What is your take coming in there? Nilesh.
Okay, so Ujjivan Small Finance Bank is in a constant downtrend, and constantly we are witnessing a pressure on the pullbacks. It is trading below all the short-term and long-term moving averages. So structure is looking weak on immediate basis, and we might see the levels of 39 to 38 as well. So first of all, not advisable to do any sort of average as of now, and avoid creating any sort of fresh long. And for the time being, if already holding the long position, then keep a trailing stop loss somewhere around 38.5. And below that, we might see further downtrend to continue. But as of now, one can stay put, keeping a stop loss somewhere around 38.5. Any pullback towards 42 to 43 can be used as an exit opportunity.
All right, this next one is coming in from Venu, who is a senior citizen, writing to us from Chennai. Kunal, he wants to know, CG Power, is the risk reward favorable right now if he goes ahead and buys this one at current levels?
No, not at all. I think the stock has done exceptionally well. So long-term wise also, I think 2020 bottom, I think if I'm not wrong, the stock was just 5 rupees or 7 rupees approximately. And from there, it's now almost 800 plus, 869 the last I had seen on the screen. So it's done exceptionally well. Even in the short-term charts, the last 1 week, when the markets are going through a risk-off mode, the stock has rallied from 700, 720 to 860 levels. So by no means are the risk reward attractive. Yes, the stock is in very strong momentum. This momentum may continue for some more time, but then when you're buying stocks, especially in terms of risk reward, then these are not the kind of charts where you look to enter. And especially at these price points, you have to wait out for a phase of correction, like what the stock saw, I think, a month back when it had come back towards 700 mark. That was a point where you should have looked to buy. So buy on dips is a better strategy for the stock.
Alright, so there you go. Buy on dips, a better strategy. When it comes to CG Power, I'm going to come to you, Nilesh, with the next one, because we do have Vivek who's writing to us. He wants to know about 3 counters that he wants to know if it's the right time to buy. Piramal Healthcare, Canara Bank and PNB make it to his list. What is your take coming in here?
Again, PNB, Piramal and
Canara Bank.
Okay, so PSU banks is a good buy as a positional bet. Technically, although the trend looks weak from a short-term point of view, but if somebody is looking to make a position from a little medium to long term, I think these are the good levels. So Can Bank can be added in the range of 95 to 100. As of now, it's an avoid from a trading point of view, and a positional upside somewhere can be seen around 150 to 120. Apart from that, PNB, I think it's an avoided current level. The stock is in a constant downtrend, and rather I would advise to add SBI at current level. So PNB is an avoid. We might see the levels of 100 or maybe 95 on the lower side, and if at all it breaks 108 on the upside, then probably one can buy this particular stock. And PPL Pharma, Piramal Pharma, I think it's a good buy at current level and can be added on declines as well. So positionally, the structure looks weak for 240, 250 kind of levels on the upside. 210 should be the stop loss for the long positions.
All right, so that's the take on a slew of counters. Coming to you then, Kunal, this one is coming in from Professor Chalam. He wants to know about PFC. He's holding about 270 shares of PFC at a price of 476. He has IDFC First Bank at 400 shares at price of 74 rupees per share. So what should he do? Should he accumulate further on dips both of these counters? And what sort of a price target have you penciled in for both of them? And if this is a hold?
Yeah, so both of them are a hold, but I believe that there could be a corrective phase which may combine to both of these stocks, because for example PFC is hovering almost very close towards its long-term moving averages. There was a bounce the stock had shown I think 3-4 days back from 440, 430 levels to 470, 475 approximately, but I think it looks like that the stock is still getting back into a settling phase, and the bounce has been indicative that maybe the stock would get back into a time-wise correction further. So both the charts, and same is the case with IDFC First Bank, from at 74, 75 where the bounce materialized, the stock is back towards 70, 72 mark. So there could be a process where both of these stocks may try and retest their previous swing lows or go slightly below those levels. I would suggest a buy and dip strategy and a hold from a long-term play.
All right, Kunal, I'm going to come right back to you because we do have Tushar who's writing to us. He wants to know if you have any good Navratri picks from a short-term perspective for him. Now, he said that he can invest a considerable sum. He's not put a number on it. So you can take a guess there, but he can hold for another year. What is your take coming in terms of Navratri picks?
So I think I've already been given Navratri picks over the last 8-9 days on the channel. You can probably look at that, but in any which ways, I think it's a good time to start building onto the larger cap portion of your portfolio. Some of the stocks which I've been recommending, for example, the likes of ICICI Bank looks very attractive from a more of a long-term play. We've been looking at mid-cap names like ABFRL. That's a chart which has been looking fairly attractive. My sense is that the stock is getting back into a bigger breakout mode on the longer-term charts. You can look at PSU stocks, ONGC. I think at 285 or 290 where it's trading right now. That's an attractive bet from the next 9 months to 1 year perspective.
All right, on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking your query. Viewers, don't go anywhere. And remember, it's the Techie Special at Buy Now Sell Now today. Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. And remember, viewers, today is the Techie Special, which means we have two technical analysts to take all of your short to medium-term queries. Let me take this next query that I have. We had, before the break, we had Kunal spell out some of his Navratri picks. If you've missed that, then do catch the repeat telecast that you can find on the YouTube channel post the show. But let me take this next query then. This one is coming in from Tanuja, who's writing to us from Calicut. Is holding 500 shares of HCL Tech in her long-term dividend stock portfolio at an average price of 1,175 rupees per share. She wants to know, Nilesh, whether she can add some more at current price, and also APL Apollo Tubes. Is it good for medium term?
So HCL Tech, as far as this particular stock is concerned, I think it's today hit a new record high. The stock is in a secular uptrend, and it looks like it is heading towards 2000 plus kind of levels from a short to medium term point of view. So for fresh entry, I think any dip towards 1750, 1700 could be a good buy. So buy on dip should be the strategy here, and the positional upside is open up for 2200 plus kind of levels can be seen from next 4 to 6 months time frame. Apart from that, APL Apollo is another stock. The structure here is looking like more sort of a time-wise correction what we are witnessing. And the major support is placed at somewhere around 1400 to 1350 zone. And for fresh entry, I would suggest to better avoid at current level, wait for some dip towards 1500 for fresh entry. And on the upside, 1650 and 1700 is the kind of a supply zone. So those are the levels where one might think of booking profit.
Alright, so that's the take coming in as far as APL Apollo and HCL Tech are concerned. But I'm going to come to you, Kunal, with the next one because we do have Venkat Ramani writing to us from Bangalore. Wants to know about KPIT Tech as well as ICICI Bank. Is this a good time to buy at the current price?
Yeah, I think both the stocks are attractive. KPIT Tech has also retraced from the last 1 month, 3 month highs. I think around 1900 to 2000 was the high for the stock. It's come back almost 10% from those levels. So it's a good time where you can look to buy. Same is the case with ICICI Bank. The stock has retraced almost 8% to 9% from its highs of 1350, 1370 approximately. So I think both these stocks are attractive. But then I'm also assuming that maybe these stocks can go into a very mild kind of a downtrend over the next 1 to 3 months in case if the market also gets a further leg of correction. So just be ready with that. Buy on dips could be a better strategy, but I think you can start at current levels.
All right. This next query that I have is coming in from Siddharth, who's writing to us from Bangalore. And Kunal, since you are on the show after a while, he wants to know about REITs. He's been waiting for you on the show, so I'll take this query to you. REITs and Mahindra Lifespaces for the month time frame. He's holding both from from levels that are below the current levels. Sorry, I beg your pardon. 340 is a buy price for REITs, and Mahindra Lifespaces is 520 rupees per share. What's your take coming in from 1 month time frame?
So I think from a 1 month time frame perspective, don't see any major pickup or a rally into the stock. The only positive sign which you can attribute for the charts for REITs, for example, is that the stock has gone through a triple retest of a support, which is around the 300 mark. But that doesn't mean that the stock would hold on to the support and it may not break. The volumes with every test for the stock has actually gone down, which means that there could be a possibility that the stock may actually break below the 300 levels. Just I think yesterday or day before, the stock had seen a bounce back to that 340 mark, which is also now closer to the 200 moving average. My sense is that it's better that you try and exit the stock closer to your cost price if in case in the next couple of days the stock bounces back, because on the way down when the stock corrects sub the 300 levels, buying the stock sub 300 could be a better strategy for REITs. For Mahindra Life, again the stock has significantly fallen below its long-term moving averages. Even at current levels, the stock is trading at a 1 year or a 2 year swing low at 510, odd mark. So I would believe that there could be more weakness into the stock price. Again, a sell on rallies is what I would recommend. In case if it comes closer to say 540, 560 mark, that could be a zone where you may look to exit and then look to buy the stock back again into a corrective phase.
All right, so there you go. That's the take coming in when it comes to REITs as well as Mahindra Life. I'm going to come to you, Nilesh, with the next one because we do have Rajiv who's writing to us. He wants to know about L&T and he wants to know if this is a good time to buy. What is your take here?
The L&T, it looks like it is forming some sort of a base formation, and after recent correction, it has reached to its multi-month support zone. So yes, it can be a good buy, and stop loss can be placed somewhere around 3,400. So can be played from a pullback point of view. Pullback may extend towards 3,550 to 3,600. So yes, it can be bought with a stop loss below 3,400.
All right, this next one is coming in from our viewer. He's not mentioned his name. He has MCX 500 shares above 5,300 rupees per share. What's the suggestion? Should he go ahead and book profits in MCX? What's your sense on this one, Nilesh?
So this particular stock is also in a secular uptrend and hitting constant a new record high. So at 6,300, I think there is another leg on the upside towards 6,500 to 6,600. So I would advise to keep a trailing stop loss here, trailing stop loss somewhere around 6,150, and ride this momentum till 6,500 to 6,600.
Right, so that's a take coming in as far as MCX is concerned. Let's take a look at the next one that is coming in from Anand from Karnat. And I'm going to come to you with this one, Kunal, because we do have him writing to us about Tata Power. He wants to know if he should make a fresh entry at this point or if he should be waiting for lower levels, the likes of 410 to 420. What is your take here?
Yeah, if that happens, then I think it will be a very good level to buy the stock, because we've seen time and again that the stock raises the bar in terms of supports. Over the last 3-4 years, we've seen that pattern consistently for Tata Power. I remember a phase when the stock was just hovering around the 200 levels, up 200 mark for a period of 3-6 months, formed a base, a support, and then moved on to the 300 plus levels. That became a fresh base support. So I think in this round also looks like that 400 could be a very strong support. But my only concern is that whether the stock would actually come back to that 400 mark. That could probably happen if in case the correction for the markets and the indices get into a bit of a severe zone. So I don't expect that, at least as of now. So I think in that parlance, maybe the stock may not correct to that 400, 410 levels. So it's always best to try and buy the stock in phases whenever you are anticipating that a better buy price is at much lower levels. So you can start maybe at levels of 440, 430, and then in case if the stock corrects further, then look to average further.
All right, this next query that is coming in from Netra, who's bought Engineers India about 230 shares at a price of, Netra has bought, Engineers India at 230. Wants to know what's the 6-month target for this one, Nilesh?
So immediate trend looks slightly on a weaker side, and if it breaks 180 level on the lower side, then it may slide further towards 160 to 155 as well. So on immediate basis, the structure looks weak. It is trading well below its all long-term and short-term moving averages. So it's not a buy at current level. If already holding, then keep a strict stop loss somewhere around 185. If at all we see any pullback towards 220, then I would suggest to review again, or maybe trail SL on the higher side for further up to continue.
Alright, so there you go. That's Nilesh's take on Engineers India. But time for a very quick break. When we come back, we'll continue taking all of your stock related queries. We also see you on the other side then. Welcome back. Thank you so much for staying tuned in. Well, let's continue taking all of your stock related queries then. And the next query that we have is coming in from Mrs. Shah. She's written to us about a couple of counters that we haven't covered. Now, of course, we've talked about L&T Nilesh, but she's writing to us about Jindal Saw as well as BHEL. So she has 100 shares of both of these counters. And when you take a look at the buy price for Jindal Saw, her buy price was 110, and for BHEL it was 60 rupees. So what is your take coming in when it comes to both of these counters?
I think both the stocks are bought at a very attractive levels, and now the stock is trading at all-time highs as far as Jindal Saw is concerned. This particular stock is constantly trading in a high top and high bottom territory. So structure still looks strong, and we might see the levels of 400 plus from a short to medium term point of view. I would advise to stay put, keeping a trailing stop loss somewhere around 325 in Jindal Saw. And at current level, I think it's a good time for a reversal in this particular stock. As far as BHEL is concerned, it looks like it has formed a very strong base somewhere around 250. Now, kind of a double bottom can also be seen in this particular stock. So it's a good candidate for a pullback. And this pullback may extend towards 300 to 320. And support is placed somewhere around 255. So ideally, that should be the trailing stop loss for the long position. I think both the stocks are looking very attractive from short to medium term point of view, as well as from a longer term point of view as well. I think both the stocks look good.
Let me just take a quick detour. Let's mark the currency, what it's doing at this point in time. We have hit a fresh record low when you talk about rupee against dollar. 84 to the dollar is the mark that we have surpassed for the first time ever. So you have the rupee that is weakened against the dollar. 84.01 is where the rupee is currently at. Remember, over the last few trading sessions, we've not been doing much. But yes, it has seen a significant weakening against the dollar of late. Or if you talk about the 10-year bond yield, it is stable in today's trading session, but yes, we've seen a sharp decline coming in for the rupee levels at least, and right now falling to an all-time low against the dollar. It is fallen past the 84 to the dollar mark. We will try and connect with an expert to understand what does this actually mean for the balance sheet of India. But yes, for now, the rupee has actually taken downward momentum. In fact, Kunal, have you tracked rupee by any chance on the charts?
No, I was actually looking at a point where the rupee had broken 83 levels or fallen below the 83 mark, and that was October, the month of October 2022, I think, if I'm not wrong. So maybe the month of October is one of the reasons why you might see some bit of a negative price action. But this comes as a very slow and a gradual depreciation of rupee, because for comparing this with the forex of other countries, I think our currency has done reasonably well so far, because where you've seen depreciation for so many of the other global asset classes, global countries, I think in that parlance, we've just depreciated by just 1 rupee in the last 1.5 to 2 years. So I think in that context, it's a very slow and a gradual depreciation for the index, so nothing major to read on the charts as such.
All right, but if you read what the dealers are saying, they are saying that the rupee has hit a record low against the dollar as the foreign banks are persistently buying dollars for foreign fund outflows from domestic equities. But however, what they are also saying, and this is as per reports the agencies are quoting, the RBI is likely to have sold the greenback to prevent the rupee from falling beyond the crucial levels. This is earlier on, but now it has fallen below that crucial level of 84 to the dollar, and you have the rupee that is at a fresh record low at this point in time, and you have the markets that are hovering around the day's lowest point. We have broken below the 25,000 mark once again for the Nifty Shansi.
Well, absolutely. And let's continue taking our stock-related queries that we have pouring in from viewers. We have Rajeshwari who's writing to us from Chennai as well. Nilesh, I'm going to come to you with this one because she's writing to us about Angel One, 50 shares purchased at a price of 2,727. Firstly, what is your take here, and what kind of target should she keep in mind then?
So Angel One is on the verge of a major breakout from its 200-day moving average, as well as if we connect all the lows, lower highs, then a falling trend line can also be seen. So a breakout is awaited somewhere around 2,800. Post then we can expect a bigger target of 3,200 plus. So on a immediate basis, I think if somebody is already holding the long position, can stay put, keeping a trailing stop loss somewhere around 2,450. And it's a buy at current level as well. We are very much bullish on this particular stock. From a short-term time frame, I think 2850 will be the target, and positionally 3200 plus can be seen from next 4 to 5 months perspective.
All right, that's the take coming in on Angel One. Let me take this next query that is coming in from Karthik. He has BSE 10 shares at a price of 2,632 rupees per share. What's the target and when can he exit, Kunal? Should he actually exit from BSE?
I think it's been an exceptional mover. The stock has just gone through a different tangent altogether, with respect to the mid-cap stocks and, the way the markets have also performed. So I think just purely basis on the way the charts are panning out over the last, 1 to 3 months, especially, I think I would probably expect that this trend should continue for BSE, at least for the next 1 to 3 months further. So the only thing which can probably, act as an impediment to the stock price in terms of the price trend is if in case the market gets into the second leg of a correction and the mid-cap stocks get into a round of profit booking. That could be the only reason why the stock may get into a corrective phase. But looking at the chart so far over the last 1 to 3 months, this is a fantastic uptrend. Looks like it should sustain.
All right, so that's the take coming in. As far as BSE is concerned, we also have Sunny who's writing to us from Calcutta. He wants to know about a couple of counters. So HinkOMC is what he's keeping on his radar because he has 60 shares at a buy price of 513. He also has ONGC that he's holding at 300 rupees as well. So what is your take coming in, Nilesh, when it comes to HinkOMC as well as ONGC?
So ONGC is again after a recent correction is forming a good base. So it's a good level to add on, and averaging can be done at current level. The stock is trading well above its 200-day moving average. So that's the major support which is placed at 276, and this should be the stop loss for the long position as well. And it's a good buy from a positional point of view for 340 plus kind of target. HinkOMC, again, a similar structure after a correction that we saw from the levels of almost 770, 760. I think now, I think retracement is done, and stop loss is coming somewhere around 476. It can be added in a staggered manner at current level as well. 550 to 600 can be seen from a short-term point of view, and positionally from 6 to 8 months time frame, I think the stock may test its previous record high of 750 plus.
All right, this one is coming in from Professor Thomas V. George. He's writing to us from Kochi. He wants to know about Federal Bank. 1,000 shares of Federal Bank at around 190 rupees per share is what he's purchased at. Kunal, what's your take coming in on Federal Bank? His buy price is near the levels that the stock is currently at.
So very good stock, but I think it seems like that the stock has this odd habit of going into a a corrective phase. Sorry. So I think closer to that 180-85 mark seems to be a support, but on the other hand 195 is a major resistance for Federal Bank. Looking at the way the markets have been structured, where the private sector banking stocks have gone through a correction, my sense is that this stock may also come back to that sub 180 mark. So if you can, then I think closer to your cost price of 190 plus, I think I would suggest that you can look to book profits once, and then if the stock falls below the 180 mark or just close to that 180 levels, that could be a very good zone where you may look to rebuy.
Well, absolutely, Kunal. That's a good zone that you've highlighted for us. But Vikram is writing to us from Pune and he wants to know if you have one or two good hospital stocks on your radar. Now, he's looking at an SIP and he wants to know a good entry point as well. So, are there any hospital stocks that you're keeping an eye on?
So, I think Aster DM, Fortis, these are the two names which are, I think recently have come back into a breakout mode. I think Fortis, if I'm not wrong, is trading at 600 plus levels. Aster DM, the last I remember, I think the stock had crossed levels of 400 plus mark, which was a major breakout point for the stock. So I think both of these charts are looking attractive. Apollo Hospital is of course one of the other names which has done phenomenally well on the longer term basis. But buying the stock at current levels from a short to medium term play could be a bit tricky. But I think if you're looking at an SIP kind of a mode and looking to buy the dips or corrections on a staggered manner, then I think Fortis as well as Aster DM is what you can look out for.
All right, let me move on then. Let me take this next query that is coming in from Sundar. He wants to know about NMDC 1,000 shares of NMDC at a price of 244 rupees per share. He's at a loss. Can he buy more or can he offload? I believe he just bought it at the peak of, a recent peak of the stock actually. One is NMDC. And Kunal, after your answer about NMDC, I want to understand what will happen to the metal index. Today it's actually buzzing. It has been buzzing because of the China stimulus, but you have a lot of enthusiasm around the China stimulus actually fizzle. You've seen the stock market also see a bit correction after the massive rally that it has happened, it has had. So what does that also mean for the metal index?
So I'll start off with the second part, Cheryl, because that's the more intriguing. I think a month or back, me and Nikunj were doing this, chat on the, graphics that, the metals index is going through a very strong super cycle uptrend. And many of the metal, commodity asset classes, the likes of zinc, aluminium, copper, etc., these are the asset classes which are going through a major revival. So my sense is that what you are looking out for potentially is the next 1 year, 3 year, 5 year kind of a time horizon where these asset classes may go through a very sharp, strong, and sustained uptrend for themselves. Now, in that parlance, yes, these metal stocks, the commodity related themes, they would also do pretty well. But then you will have to have a very high risk appetite over here because these asset classes can swing 10-20% in a very short span of time, and so would be the case with a stock like NMDC. Very attractive chart when I look at it from a long-term play, but then as I said that you may probably have to look at a much more higher degree of time frame as well as a higher risk appetite. If you're okay with both of that, then I would suggest a hold.
All right, Kunal, are there any other metal counters except NMDC that you're keeping on your radar then?
So SAIL is something which is apparently popped up on the radar in terms of a potential turnaround. The stock is at 130. It's fallen almost 20-25% from its recent highs of 150, 160 approximately. That's a chart which you can look out for. Tata Steel is another name which I think holds a lot of potential. The stock can make a very strong comeback. If you're looking to buy the performers or staying with the leaders, because that it requires a different kind of a mindset, going with the stock which has been a leader, but then you're buying these stocks at a premium, and then the other mindset is then trying to buy the stocks which are underperformers, which could probably potentially play a catch up. So from the underperformance category, SAIL and Tata Steel is what you can look out for. But if you're looking at the larger cap names and the ones which have been performing very well, I would still go with the likes of JSW Steel, Vedanta and JSPL in the same order.
All right, Kunal, next one is coming from Vinod. He's writing to us from Gurgaon. He wants to know about Jubilant Foodworks, 200 shares at a price of 507 odd rupees. He's a long-term investor, but what should he do? Continue to add some more in his portfolio, hold or exit? What's your take coming in on Jubilant Foodworks?
So I would be bullish on the stock. I would believe that you can continue to hold on, not suggest an add at current levels, because it looks like the stock is on the verge of a medium-term corrective wave. The last, I think, 3 months or 3 weeks rather, the stock has gone through a correction from 700 to now 620 thereabouts. So it's a very good chart. The stock holds a lot of prospect to try and make a comeback to that 700 plus mark. But just in the very near term, looks like the stock is still going to that corrective consolidative phase. So you might probably get better levels.
All right, and this is one counter, Kunal, that this is a little bit of a catch-22 because we've been talking about this counter and there's a lot of interest when it comes to this one because there's IREDA that we're getting Mitra right to us from Vijayawada from, and when you take a look at his buy price, it was 253 rupees. 3,000 shares is what he has. He wants to know what to do with the counter. What's your take?
So again, a stock which you've bought probably at the higher end of the price trajectory. I'm not sure whether you bought the stock when it was first, had broken past about the 250 levels and moved on to 300 plus mark, or on the way down when the stock fell from 300 to sub 250 levels. But in whichever ways, I would probably believe that the stock, you've bought the stock at a higher level. A better price to try and buy the stock should be closer to that 200, 210 odd levels. That's where over the last few weeks, the stock is trying to just about get to a stable territory. The volumes are starting to pick up when the stock reaches closer to that 200, 210 level. So if in case you are looking to average further, I would probably believe that 200 to 210 could be a better level.
All right, so that's the take coming in on IREDA. But on that note, we're totally out of time on this edition of Buy Now Sell Now. Thank you so much, Kunal, for joining us on the show, as well as teaching us something new on BNSN Pashala. With that, we're totally out of time on this edition of Buy Now Sell Now. Thank you so much for watching. It's a goodbye from Shreyansi. I'll be continuing next for Markets at Noon with Snehi.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.